trading has been halted for many banks. I counted 22 on this list right here. And even though the government guaranteed that people will be able to access their money, there are still huge lines at the Silicon Valley Bank. This branch is in Massachusetts, so it did not just have branches in San Francisco. They actually had locations all over the US. And we Tesla stock investors should really pay attention because this could really spiral out of control already. We had 2 large banks fail. This bank stock dropped 83% for a moment today, and it closed 45.5% down. And it has $65 billion in assets, as you can see right here. First Republic Bank is down 61%, almost 62% today, which feels exactly like deja vu because on Thursday, Silicon Valley Bank was down almost that much in one single day. And this bank has $126 billion in assets. And we want to add $110 billion from the failed Signature Bank to this right here. These are all bank failures from 2001. And now this would be somewhere close to here, around 300-ish. And Michael Burry, who profited from the 2008 collapse, is now saying that 2023 is going to be the same. People full of hubris and greed take stupid risks and fail monies when printed because it works so well. However, if you look at Michael's track record, in 2017, he said, I didn't go out looking for this, I just did the math. Every bit of my logic is telling me the global financial system is going to collapse. Whoops. He also bet against Tesla stock. Michael Burry in 2021, probably sometime in March, shorted Tesla stock and then exited that position in November, according to New York Post. And if he only actually bought the shares and bet on Tesla stock to go up, he would have actually made a whole lot of money. But now, billionaire Bill Ackman, who made $2 billion when he bet against the markets right before the virus, is predicting one bank failure after another. He says the alternative is one bank failure after the next. The weakest 3 have already fallen. The market is already telling you who is number 4. So he's saying there's going to be another bank that will fail. This is not the way one maintains confidence in a banking system. So let's go through this whole thing that Bill just posted here. Recent events have made clear in the mind of the average American that there is a risk that they could lose money doing something they used to think of as safe, being a depositor. We have had a 2-tier system since the Great Financial Crisis where a few large banks have the explicit backing of a taxpayer and the rest have $250,000 of deposit insurance. This 2-tiered system worked until it didn't work. In a world with Twitter where information spreads super fast and smartphone-enabled bank accounts where withdrawals can be made with a push of a button, no bank is safe from a run unless the depositor has an explicit government guarantee that ensures that they always have complete access to the total value of their deposits. Without this guarantee, the non-systemically important banks will likely continue to experience large withdrawals. And that actually does make sense. When you look at Silicon Valley Bank, $42 billion were withdrawn in a single day. Compare that with the Washington Mutual Bank from about a decade ago. Only $16.7 billion were withdrawn in a 9-day period. I think it is safe to say we should maybe reconsider how the whole thing is structured now that people can withdraw money so easily. You just have a phone, okay, log in, boom, withdraw, done. You couldn't really do that before as easily. This problem is compounded by the stock market. Consumers now understand that when a bank stock collapses, it is only a matter of days before the bank fails due to liquidity demands by their depositors. Silicon Valley Bank dropped 60% in one day on Thursday, and then the whole bank collapsed. First Republic Bank dropped today 62% almost, and that would imply that Bill Ackman thinks this bank is going to fail, as well as perhaps this bank as well. Although right now a bank failing does not mean that people will lose money, because it appears that the government will step in. Perhaps. You don't really know until it actually fails and until the government actually says, okay, yeah, we'll bail you out too. But they are free to change their mind at any moment. And then Bill continues here, the rewards for being a depositor are minimal compared with the risk of loss from losing access to funds needed to run your business or household. Until this problem is solved, our banking system is at risk. The more time the public is exposed to a period of uncertainty, the more imprinted deposit risk is on the mind of the public. And this has a possibility of spiraling the whole economy out of control and bringing the whole economy down with it, as well as the stock market with it. Therefore, perhaps Tesla stock would drop too. And Bill continues here. That is why it is critically important that our government promptly puts its full faith and credit behind our deposit system. If in fact your deposit is safe if a bank fails, as in SVB and Signature, then why is it difficult for the government to confirm that your deposit is good when your bank is still operating? We need a temporary system-wide deposit guarantee that will remain in place until our outmoded $250,000 deposit guarantee program is modernized. Since this new system can be created over a weekend, we need a stopgap measure to get us through the next few days and weeks. So he's thinking that this is going to go on for weeks if this does not stop. The alternative is one bank failure after the next. The week is free, have already fallen, and the market is telling you already who is number 4, or maybe even number 5. This is not the way one maintains confidence in a banking system. Lastly, the more banks that fail, the higher the cost of capital will be for non-systemically important banks. This will have a profound long-term impact on the cost of capital for small and medium-sized businesses, a cost that has already increased materially due to the overall rise in rates. It is not helpful to put even more pressure on these critically important drivers of our economy, says Bill Ackman. There's a reply to Bill. Total U.S. deposits are $18 trillion versus total U.S. GDP at $23 trillion. How could you guarantee all of that? Well, one way to think about it is if it's guaranteed by the federal government, then if you take money out, where do you put it? You have to put it somewhere. You may buy an asset, but most people would still keep roughly the same amount of cash. Maybe it would fluctuate quite a bit, of course, but you wouldn't just take everything out, though. You still need to pay taxes, you still need to make payroll, you still need to buy groceries, and you can't really do that with crypto, at least not yet. But if they decide to do that, I think they should only do that for US citizens and only for US corporations. Bill Ackman certainly has some good points here. To me, only one thing is really certain, and that is there's a possibility, I'm not sure exactly how big that possibility is, hopefully it's very tiny, that this whole thing could spiral out of control and that would bring everything down. And the question is, if more banks fail, which seems at this point a good possibility, will the government step in again and give everyone their money? Gary Black this morning said one of the dumbest statements ever if Treasury was trying to calm depositors. May be true, but why add gasoline to the fire? Here's what he's talking about. The Treasury also said it sees some institutions with issues similar to Silicon Valley Bank. Although, to be fair, I think that statement might have been taken a little bit out of context. I think they are referring to this right here. Regulators close crypto-focused Signature banks, citing systemic risk. Meaning, if you close the bank and if you give everyone their money back, you have to justify why are you doing this. So you have a few options. You can say, oh yeah, we're just doing it because, the bank failed and whatever, and we're just good people and we just want to try to how people not lose money. It doesn't matter if it's mostly rich people and the taxpayers will have to pay for it. Yeah, you just it's okay. But on the other hand, it's much easier to justify, okay, yeah, we will have to sort of bail it out. And the way we are going to justify it is by saying that it was a systemic risk. So the government is not scaring other people by saying, oh, there are more banks that have this systemic risk. They only said that this signature bank had this systemic risk, and that's why they closed it. And that makes it very easy to justify this action. But the interest rates are now certainly less likely to keep going up. Ross is saying, wow, the bond market has spoken. The 2-year is now down 50 basis points to 4.07, and the 10-year is at 3.52%. Now that the Fed broke something, looks like the rate cycle is over, which would be great for stocks like Tesla. And that's one reason why the market really didn't do much today, although it did go down at first. But at the end of the day, sort of all right. Although Tesla was down about 4% for a moment, but it has now recovered. And actually today, Tesla stock is up. And Goldman Sachs, for example, now expects no rate hike at the next Fed meeting. We'll see. If the government does not really step in, I would expect that there is a high chance of the panic continuing, and some people will give into that panic. Stay calm, everybody. Think and do what is best for you. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.